The upcoming week in financial markets is poised for significant developments as investors focus on geopolitical tensions, oil price volatility, and critical economic data releases. The ongoing Iran-Israel conflict, now in its ninth day, has already impacted global markets, causing a surge in crude oil prices, with Brent crude futures rising over 11% since the conflict began. As India is a major oil importer, continued escalation could strain domestic markets. Conversely, any signs of de-escalation might bolster market sentiment, offering potential relief for investors. In addition to geopolitical concerns, market participants will closely monitor key economic indicators from the United States. The Bureau of Economic Analysis is set to release the final GDP growth figures for Q1 2025, with preliminary data indicating a contraction of 0.30%. This follows a 2.4% growth in the previous quarter. Any deviations from expected figures could heighten fears of a U.S. economic slowdown. Additionally, the release of the Personal Consumption Expenditures (PCE) Index will provide insights into consumer behavior and inflation trends, further influencing market dynamics. As these events unfold, investors will be keenly assessing their implications for global financial markets and potential shifts in investment strategies.
ZaMiner has launched a free cloud mining application, allowing users to mine cryptocurrencies such as Bitcoin, Ethereum, and Dogecoin without the need for hardware or upfront investment. This development comes amid a global surge in cryptocurrency interest and aims to lower the barriers to entry traditionally associated with crypto mining. The app offers an accessible platform where users can start mining with a free $100 trial and receive daily payouts in USDT, a stablecoin pegged to the US dollar. ZaMiner's initiative is particularly significant as it addresses common challenges in crypto mining, such as high hardware costs, technical complexity, and environmental concerns, by utilizing a cloud-based infrastructure powered partly by renewable energy. The launch of ZaMiner's app is timely, given the increasing public interest in passive income strategies and rising cryptocurrency prices. With active users in over 180 countries, the platform is designed to be globally accessible, supporting multiple languages and catering to both crypto-savvy and underserved markets. The app also features a tiered referral system, enhancing user engagement by allowing users to earn commissions from their network. As ZaMiner continues to expand its reach, the company reinforces its position as a trusted provider in the cloud mining sector, promoting a secure and user-friendly mining experience.
The U.S. Securities and Exchange Commission (SEC) is considering revising the definition of a foreign private issuer (FPI), a classification that currently allows non-U.S. companies to access U.S. capital markets under less stringent regulatory requirements than domestic companies. This move comes amid concerns that the existing FPI framework may enable foreign entities, particularly those from jurisdictions with minimal disclosure mandates, to bypass effective regulatory oversight. The SEC's concept release, which invites public commentary, highlights a significant shift in the landscape since the FPI definition was established in 1967. Notably, a growing number of FPIs are incorporated in jurisdictions like the Cayman Islands, which account for over 30% of all FPIs and are primarily traded within the U.S., raising questions about the adequacy of current oversight. The SEC's proposed changes could include tightening the shareholder and business contacts tests, introducing a foreign trading volume requirement, and mandating listings on major foreign exchanges with robust regulatory standards. These adjustments aim to ensure that FPIs are subject to meaningful regulatory scrutiny either in their home countries or the U.S., thereby protecting U.S. investors and leveling the playing field for domestic companies. The potential impact is significant. More than half of the current FPIs could be affected, which includes a substantial portion of entities incorporated in the Cayman Islands and China. If implemented, these changes could alter the strategic considerations for non-U.S. companies seeking to enter U.S. markets and might lead to a reevaluation of incorporation strategies to maintain FPI status.
The Organization of the Petroleum Exporting Countries, OPEC, has been commended for its strategic decision to increase oil production amidst growing geopolitical tensions in the Middle East, according to Igor Sechin, CEO of Rosneft PJSC. Speaking at the St. Petersburg International Economic Forum, Sechin emphasized that OPEC's move to accelerate production rates was prescient, especially in light of the ongoing conflict between Iran and Israel. The group's decision to boost output over the past 3 months has been driven by consumer interests and market stability concerns. With an upcoming meeting scheduled for July 6, OPEC is expected to discuss further production increases, with Saudi Arabia reportedly advocating for significant hikes to regain market share. Rosneft, Russia's largest oil producer, has expressed concerns over losing market share to U.S. shale producers, despite the recent cooperative efforts with OPEC. Sechin revealed that Rosneft's strategic planning is based on conservative oil price estimates of $45 per barrel for 2025 and $42 to $43 for the following year, reflecting the company's cautious stance amid current market volatility. The oil market has experienced heightened turbulence, with futures fluctuating by approximately $8, driven by the heightened conflict in the Middle East. This volatility underscores the broader challenges facing global oil markets as geopolitical developments continue to influence supply dynamics and pricing strategies.
The recent geopolitical tensions in the Middle East have triggered a notable shift in global financial markets, with investors increasingly turning to gold as a safe haven. Traditionally, during such crises, the U.S. dollar and Treasury bonds have been the go-to assets for risk-averse investors. However, the current situation is different, as the dollar weakens and bond yields rise, prompting a surge in gold purchases. Gold has now surpassed the euro in reserve currency status, comprising 20% of global reserves compared to the dollar's 46%. This shift is partly attributed to the erratic policies of U.S. President Donald Trump, which have diminished the attractiveness of U.S. assets and contributed to the dollar's decline. In the oil markets, the ongoing conflict has not led to the expected price spikes. Instead, oil prices have stabilized at levels seen over the past 3 years, with supply expected to outpace demand. This is due to the rapid energy transition, particularly in developing countries, and China's anticipated peak in fossil fuel demand by 2027. For Canada, this presents a temporary windfall as a reliable oil and gas supplier. However, the long-term outlook suggests a decline in the oil industry, urging Canada to diversify its economy and invest in new industries. With global investors seeking alternatives to U.S. assets, Canada has a unique opportunity to capitalize on this shift, provided it addresses internal market barriers and fosters an environment conducive to innovation and growth.
The article examines the potential for a $10,000 investment in Bitcoin to grow into $1 million by 2035, highlighting Bitcoin's historical growth and future prospects. Since 2015, Bitcoin has delivered remarkable returns, with an almost 43,000% increase, turning $10,000 into $4.3 million. The article suggests that while replicating such exponential growth is unlikely, Bitcoin's scarcity, institutional demand, and upcoming supply constraints, such as the 2028 halving, could still drive significant price increases. The U.S. Securities and Exchange Commission's approval of Bitcoin exchange-traded funds, ETFs, in January 2024 further solidifies institutional access, potentially boosting demand. However, the article tempers expectations, proposing a more realistic tenfold increase in Bitcoin's value by 2035, which would turn a $10,000 investment into approximately $100,000. It also outlines several risks, including regulatory changes, corporate balance sheet vulnerabilities, and technological threats like quantum computing. Investors are advised to employ strategies such as dollar-cost averaging and maintaining a long-term perspective to navigate these uncertainties. Overall, while Bitcoin's future growth may not mirror its past, it remains a compelling, albeit risky, investment opportunity for those willing to embrace its volatility.
The main financial event discussed in the article is Salesforce's $8 billion acquisition of Informatica, a significant move in the tech M&A landscape, particularly within the AI sector. This acquisition highlights a strategic expansion in Salesforce's enterprise software portfolio and underscores the growing importance of artificial intelligence in corporate strategies. The deal also reflects the competitive nature of the AI space, as evidenced by IBM's interest in Informatica. This acquisition is notable in a market where large-scale M&A activity has been subdued due to high interest rates and economic uncertainty, with the number of such deals declining from 1,423 in 2021 to 815 in 2025. In addition to Salesforce's acquisition, the article discusses the potential for increased M&A activity in the tech sector, focusing on companies like Innodata and UiPath. Innodata, with its strong AI platform and substantial revenue growth, could be an attractive target for tech giants like Microsoft, Google, or Amazon. UiPath, a leader in robotic process automation, is expanding its capabilities with AI-powered automation, making it a compelling acquisition candidate for companies with automation ambitions such as Microsoft, Oracle, or ServiceNow, as tech companies continue to pursue strategic acquisitions to enhance their AI and automation capabilities. These moves could significantly impact market dynamics and competitive positioning within the industry.
Nakamoto Holdings, a prominent Bitcoin holding company, has successfully raised $51.50 million through a private placement in public equity PIPE deal to bolster its Bitcoin acquisition strategy. Spearheaded by David Bailey, a crypto advisor to former U.S. President Donald Trump, the company aims to capitalize on the growing investor interest in Bitcoin as a treasury asset. The rapid fundraising, completed in under 72 hours, underscores the robust demand for Nakamoto's strategy of accumulating Bitcoin, as highlighted by Bailey. The financing, priced at $5 per share, contributes to KinleyMD's total funding pool, which now stands at approximately $763 million, including convertible notes. In parallel, CoinMarketCap, a leading cryptocurrency price tracking platform, has successfully thwarted a major security threat by removing a malicious pop-up from its website. This pop-up was attempting to deceive users into verifying their cryptocurrency wallets, posing significant risks to user security. CoinMarketCap has assured users that it is actively investigating the breach and implementing enhanced security measures to prevent future incidents. This incident highlights the continuous cybersecurity challenges faced by platforms operating in the digital asset space, emphasizing the need for vigilant security protocols to protect investor interests. Additionally, Thailand's Securities and Exchange Commission, SEC, is seeking public feedback on proposed regulations for utility token issuance linked to crypto exchanges. The new rules would require exchanges to disclose the identities of individuals associated with token issuers, aiding the SEC in monitoring for insider trading activities. This initiative is part of Thailand's broader effort to establish a comprehensive regulatory framework for its burgeoning crypto industry, aiming to enhance transparency and investor protection while fostering innovation in the digital economy.
Oracle Corporation is experiencing a significant upswing, with its stock rising 77% from its 52-week low as of April 21st. This positive momentum is driven by the company's robust fiscal 2025 Q4 results and optimistic future guidance. Oracle, traditionally known for its database management software, is capitalizing on the booming demand for cloud infrastructure services, particularly those linked to artificial intelligence, AI. The company reported a 9% increase in annual revenue to $57.4 billion. With projections to reach $67 billion in fiscal 2026, a 17% increase. This growth is underpinned by a 41% year-over-year rise in remaining performance obligations, RPO, to $138 billion, indicating a strong pipeline of future revenue. The surge in Oracle's RPO is largely attributed to the demand for AI-related cloud infrastructure, as seen in its involvement in the $500 billion Stargate AI project alongside OpenAI, SoftBank, and MGX. Oracle plans to significantly expand its data center capacity, building 30 new dedicated centers and 47 multi-cloud centers in fiscal 2026. This expansion supports its forecast of a 70% growth in Oracle Cloud infrastructure revenue for the year, following a 50% increase last year. Additionally, Oracle's strategic investments in AI and cloud services position it well in the rapidly expanding infrastructure as a service IaaS market, projected to reach $712 billion by 2032, with a strong growth trajectory and a valuation of 31 times forward earnings. Oracle presents a compelling investment opportunity for those looking to capitalize on the AI and cloud computing boom.
Miner, a US-based cloud mining platform, has launched a new free cloud mining service designed to align with 2025's green tech and smart mining goals. This initiative reflects the company's commitment to innovation and environmental responsibility, addressing the growing concerns in the crypto mining industry regarding energy consumption and environmental impact. The platform allows users to mine cryptocurrencies like Bitcoin and Ethereum without the need for hardware, leveraging AI-driven algorithms and renewable energy-powered data centers to optimize efficiency and sustainability. This move positions Miner as a leader in the evolving landscape of crypto mining, which increasingly prioritizes eco-friendly practices. The platform's key features include a free mining startup trial for new users, AI-optimized mining schedules, and a user-friendly interface that simplifies the mining process. Additionally, Miner offers daily payouts and a tiered referral system to encourage community growth. By eliminating hardware requirements and utilizing green-compliant energy policies, Miner not only meets global sustainability benchmarks but also caters to the preferences of eco-conscious digital asset users. This strategic launch is expected to enhance user accessibility and potentially increase the company's market share in the competitive crypto mining sector.